Welcome back, viewers. Today we will be taking a look at a Fibonacci, EMA, and RSI trading strategy. But before we do, if you have not watched the first video on the channel and all the videos after that, you need to go do that now. Here at the Academy of Forex, we are building the best trading system possible as a team. And as a team, we will all profit from it when we are done. You can find a link to the first video down below in the description, and you should also see it pop up in the top corner right now. There is also a link down below to sign up for TradingView. You can save a little bit of money if you use the link below to sign up for your account. You can also find a link below to join us on Discord. Discord is a free group communication platform where we are having great discussions about all things to do with trading. Lastly, if you would like a list of all the indicators we have tested along with their win rates, but you aren't interested in watching all the videos on the channel, you can sign up for our $9 Patreon, and you will receive the complete list of indicators. We also would like to introduce our Patreon exclusive Discord channel. As a $9 Patreon, you will be invited to join an exclusive Discord channel where we will give you a list of winning indicators and links for the MT platform, give you winning strategies, post trade ideas, give advanced advice, and much more. So click the link below to join our Patreon. Alright, as I said, today we will be taking a look at a Fibonacci, EMA, RSI trading strategy. Before we do though, I wanted to put the indicator scoreboard up for everyone to see. So, to date, we have tested 310 indicators, and out of those 310 indicators, 124 of them have been winners, which means that they have met or exceeded the 60% win-loss ratio threshold that we have set for them. The best ones so far were able to achieve a 100% win rate. Now, you need to go back and watch those videos to understand the context of how they were able to achieve that. But as we are working on building the best trading system possible, you can take any one of those 124 indicators and get out there and start potentially profitably trading the markets with them now. So go back and watch those videos, make a list of those indicators, and get out there and see what you can do with them. But stick with us here as we work on maximizing your trading profits. Okay, so today we are looking at a Fibonacci, EMA, and RSI trading strategy. So first we'll take a look at the particular indicators we're using. So one, we are using a 50 period EMA, which you can see here, the blue line. And then we are using the standard 14 period RSI. And then we are going to use the Fibonacci retracement as well. So the setup we are looking for is the price action needs to be trading below or above the EMA. In this particular case, you can see here that it is trading below, and we get a pullback to the EMA. You can see that it pulls back right here. The next thing that we are going to do is we are going to use our Fibonacci retracement from here down to here, and we're looking for at least a 50% retracement or more. And so you can see that that takes place right there. So that now fits our criteria. Now, the next thing that we are looking for is hidden divergence on the RSI. And so in this particular case, we are looking for a hidden bearish divergence. And so let's see here. If we take a trend line from here, from this point to this point, we have a trend downward there. But if we look at that same point on the RSI, you can see that the divergence here is a bearish divergence. So RSI is moving up as this is making lower lows essentially. Now, one thing to keep an eye out for is that the pullback, in my opinion, shouldn't break above the point that you're using to draw your fib level off of. And so right here, for example, is where I used my fib level down to here. The pullback has not closed above that point. The tails can break above it, but it can't close. All right, so now that we have that in place, we have the divergence. Next thing we're going to look for is a candle formation. So we're looking for either a hammer or, excuse me, a hammer or a engulfing candle. So in this case, it would be a bearish hammer or bearish engulfing. And so it looks like we get one right here. This is a pretty close setup right here. But this one was not actually an engulfing candle. It was really close, but not quite. So let's go ahead and play it out a little bit more. And right here, you can see that we now have the full setup. So this is a big engulfing candle right here. You can see that, again, we draw here to here is going to be our point. And so that's what we would use to draw our fib level off of right there. You can see that this little tracement right here gets really close or touches, barely touches the 50% retracement. It hasn't quite hit the EMA, but that's okay. As long as it's within 15 pips, I consider that close enough. And then we have the divergence down here at the bottom right there. So now that we have all that set up, what we are going to do is we are going to take a short position here, and we are aiming for our stop is right at the top of the body of this candle, and we are looking for a 1-to-1 risk reward in this particular case, and we would close out half the trade at 1-to-1, and then we would let the rest run as far as it as far as we can let it go, whether you want to use your own exit or take it at the full retracement, like the full level where it drops all the way back down to here. That's totally up to you. And then that's it. You let it play out, and you can see right there, comes down, hits our 1-to-1. Easy peasy. That would have been a winning trade right there. And I will move this video a little bit forward here to the next one that I find, and we will take a look at that. Okay, so we are on to the next one right here, and it's actually just formed right here. And so we have our fib level from here to here. You can see that right here, this candle came back, touched the 50%, actually made it a little bit farther. Now, the candles can break above the EMA or below the EMA if you're looking for a long signal. And that's still valid as long as it doesn't form a new trend to the upside, basically, is kind of the thing I was looking at. And so here we see that it breaks up above and then it comes back down. It doesn't necessarily have to come back down below the EMA for it to be valid, but you can see here that this one in this case does. And then we have the hidden divergence down here on the RSI. It's very, very close actually on this one. I mean, barely gets us above, but it does. And so it's not a huge divergence happening there, but this is barely above this one. And so it technically is valid. Would have been questionable maybe looking at it in real time. And then at that point, take a short, and we're looking at the let's see, the body of that candle would be our stop. We're looking at a 1-to-1, so about 21 pips in that area. Put it at 23 just so that way we don't fiddle with it. Play it forward, and boom, again, easy peasy, nice win there. And continue down really strong there. So, all right, I'm going to play it forward a little bit more here, cut the video so that way I can find a long setup on this. All right, so here we are. This is going to be a long version of this, so you can see that price action came up. You can see that it was working on an uptrend here. You can see the RSI also working on an uptrend there. You can see that right from this point to this point, and I try to go back and find the most valid pivot point here to run a Fibonacci level off of. So you can see right there we have that point, and you can see from that point to that point we have the hidden divergence. This would be a bullish hidden divergence. RSI is making lower lows, and the price action is working its way up there. And then we draw our fib level from there to there. You can see that this price action easily came back and hit the 50% and more. Now, in this particular case, this is what I was saying a moment ago. You can see that the price action has actually broke below the EMA, and this candle right here that we're looking at is an engulfing candle, and it hasn't closed back beyond the EMA, but that's all right. It's still a valid signal as long as it wasn't way down here and then working on a downtrend. As long as it's pretty close, kind of within the EMA there, then I considered it a valid entry. And we're looking at there. Our risk is really super small. Oh, let's see here. Oh, I got this all messed up. Let's try that again. Well, if I could find the right things. Let's try that one more time. We'll zoom in on this, make it a little bit easier here. So there to there, it's about 17. I usually rounded up to at least 20 on some really, really small ones. And then we're aiming for 20 pips to the upside. Right about there. Play this out a little bit, and in this particular case, came down and it stopped us out. So that one would have been a losing trade. It was a valid signal, but a losing trade in that case. So let's play it forward here a little bit more and see what happens. And you see right here, we pick up another one right here. So you can re-enter on this. So you see that it came down, unfortunately stopped us out on that one, but we could re-enter on this one right here. We still have all the criteria is met. We still have the Fibonacci level. It didn't close. This area didn't close beyond this area. So that's still valid. Run our fib level over here. It obviously made it down to the 50 and well beyond. And then we still have the hidden divergence taking place down here on the RSI from those almost exact same points right there. And so we would have taken an entry on this candle, this one right here. This was an engulfing candle. Zoom in on this. There to there. Let's go ahead and bump it to 20. And you can see on the very next candle, we don't even have to play it forward. I skipped it beyond it just a little bit. But there on the very next candle, it hit the take profit pretty nicely. And maybe continued on. Yeah, continued up there quite a bit. Now, this is what I was saying, is that you can take your next stop and close out the rest of the position as it makes its full retracement back into this area, or maybe even this area, or again, just use an exit indicator. It is totally up to you. All right, so there we go. There's a couple really good examples of how this strategy works. So before we get into the numbers on exactly what this strategy was able to achieve. Now would be a good time to say that if you're looking to excel your trading experience, your trading knowledge, I highly recommend that you join our Patreon only channel on our Discord server. To do that, obviously need to be a patron. Our Patreon link is down below. It is super duper cheap. Doesn't cost hardly anything at all. But in there we give a lot of great information, a lot of advanced information that we don't necessarily put out in the regular server and the regular channels. Our admins and quite a few of the other members post regular trade ideas and trade analysis, really outlining the perfect conditions that you should be looking for to dial in your trading strategies, or to just take, trades, the market setups that you should be looking for to take trades. They grow small accounts really nicely, a lot of good profits off of, very, very little investment into accounts. And as well as that, we have our a list of a lot of the winning indicators that we normally on the channel, we're testing indicators to find the best indicators that we could possibly find. And we have a really large list of a lot of the winning indicators for the MT platforms that one of our admins has also located and posted for everybody. So all in all, it is a great place to be. A lot of great information in there, as well as some wonderful positive mentality and positive vibes in there. Everybody's super awesome, really positive, really uplifting. So it's just a wonderful place to be, whether you are a brand new trader or an experienced trader. You just want to be around people with the same positive mindset. So all right, back to the strategy here. What were we able to achieve here? Well, I did 50 trades like I normally do. Again, I don't feel like 100 trades are necessary. Often you will find that at 50 trades, what you have is going to really kind of, continue to be about the amount you're going to get. Rarely do you get a drastic difference from 50 trades to 50 trades. So 50 trades I did on this one. I did it on the 2-hour time frame because I couldn't really figure out exactly what time frame they were using in the original video. And this is the Great Britain pound versus Japanese yen. Of course, you can see that up there. So out of the 50 trades, there were 38 winners. There were 12 losing trades. That's a 75% win rate. Really, really satisfied with this. This was even better than the original video who claimed it was a 70% win rate. It's possible that over a long enough period of time, we may see, a slight drop in the win rate, but this is one of the first videos that I've done that the win rate is almost identical or better than the original video. This strategy is a really cool, solid strategy. It seemed to work really decent. It does have some flaws, and the flaws that I was able to identify when I was playing around with this is that often you will go, let's see if I can find an instance. Yeah, so here's an example of what I didn't necessarily like about it. So you see here that we get a really solid downtrend that plays out right here. And frequently what I was seeing was that we didn't get enough pullback to the EMAs to constitute taking a trade signal. It's not until the trend really started to weaken that it was able to make its way back to the 50 EMA. And then at that point, it does get a little dicey as to whether or not the trend's just going to reverse and shoot off in the other direction, or if it really is going to come back, retrace for a bounce off of that lower or upper level that it had already established. And so I noticed this quite often, is that it would push these trends all the way, ride the trend all the way out. And then at the very end, would snatch up a trade or two. And so that is a little questionable Honestly, for most trades, you want to try to get in as soon as you can to a new trend being established, so that way you can ride it out as long as physically possible, really maximizing your profit, potential. And so beyond that, I didn't see a whole lot that I didn't like about this. It was really cool, relatively okay. It's a simple strategy, but not necessarily easy to see. It takes a little bit to get your eye adjusted to looking for the right conditions. And so, but after you do about 10, 15, or 20 tests and trades on it, then you can kind of start to spot it easier and easier and easier. So, a simple strategy, but not necessarily a easy strategy. But all in all, really impressed with this one. This is a really, really solid strategy here, I feel like. Of course, it will need to be tested across other pairs to see if that data can carry over. If you're going to try it on other time frames, then it also needs to be tested on those other time frames. Don't just jump in and go all in on other pairs and other time frames without putting this to the test. But it seems like there's a really solid foundation here to work off of. So all right, there you go. I'm going to cut the video here so that way it doesn't get any longer. Another great strategy. I will see you all in the next video. If you have not already, like this video, share this video, comment below, and subscribe to the channel. Also, turn on the bell notification so that way you are notified anytime I post a new video. So that way you know what indicators we have tested and are testing. Also, there is a link down below to join our Discord server, which is a free group communication platform where we discuss all things trading related. There is also a link down below to TradingView, and if you use that link to TradingView to sign up for an account, you will save a little bit of money. And lastly, there is a link down below to sign up for Patreon. Please sign up for the Patreon and support the channel the best way you can.